Welcome back to the channel. This is the FX Factor. Thank you for joining me on my journey in becoming a 2 million funded trader. Here is an update what happened during this week. First, we are sitting in my real account. This is my personal account. I'm looking at Euro Canadian, which was Monday morning on the European Open. They sent this pair down on the downside. Here we observed a change of character, so I took a trade and I escorted down to the 1436 level. And over here I really didn't like this sort of price action. Usually when there's a pin bar and there's an inverted hammer type of thing. So as you can see, as soon as it reached the highest point of the pin bar, I closed the trade and I was happy with it. It wasn't perfect, but it was good for me starting the day. On the 21st, however, I saw a 4-hour bearish engulfing candle, which I took as a high probability trade, because we just came out from this consolidation. So it was pretty much the first impulse wave, a correction wave, another impulse wave, and then I thought this was the next correction wave. And at the end of the correction wave, one 4-hour, there's another 4-hour. So I really expected the pair to come down at least to this 42,500 range. Unfortunately, they shot it back up and created a bullish engulfing candle right after that, which is the difference, the key difference between your personal account and how you can trade it, and a prop firm challenge or verification account on which you need to have strict stop loss policy. In here, I did not, and I was able to find a nice 4-hour bearish engulfing and took that down and managed to close those two in a profit. In the meantime, unfortunately, on the prop firms, these were all losses. So when we come over to Fidelcrest, we can see the obvious that one of the accounts that was already in some drawdown was failed, and that is exactly why normally I have the rule that I don't trade the same position on my personal account and the funded accounts, because I don't want everything to go south. But since that was for me a high probability trade, I've done it. So I actually broke that rule and I traded on my personal account and both Fidelcrest accounts and the E8 as well. So because of that, the one that was already in drawdown went down and failed. The other one is still okay. It's about 1% DD right now. If we come over to the E8 funding, that is now in about 2% in the red. So it didn't went as I planned, let's be honest. On the contrary, on my personal account, I've closed my existing shorts on S&P 500, so I managed to close a nice 5.5% this week, which is nearly end of February, so we are pretty good. I have a profit factor of about 3, that's about 33% win rate, so I'm pretty okay with that result for February. We have 3 more days, but I will be out on Monday and Tuesday running errands. Maybe have some time on Wednesday. We will see how it is. So if we come over to TradingView, this is S&P 500, I tell you what was the reason why I actually closed this trade. So one of the reasons is that specific trend line, which is again respected as of now. I don't say it couldn't happen that it will come down below, but I don't think that will be the case. The other reason was on the 1-hour time frame, I also had a trend line which was respected beautifully to the pip, and as soon as it touched and started moving up, I was out of the trade. Actually, I had one from here, one from around here, and one from around here, and those 3 trades actually came up to this nice 8%. I'm quite happy how it turned out for now. What I believe is going to happen from now on is that we will see S&P 500 coming back up a little bit, either to the 160 or the 180 zone, and then we can see another leg down. And the reason for that is if we go over and look at the US dollar, we can see that it is now really up far, overextended, and I believe we need a little bit of a breathing room on this as well. So if you look at the daily, I wouldn't be surprised if it would come up to the 106, that level, because it was a significant level of resistance before, and to, you know, just come down for a little bit, get a little bit of breather, while in the meantime the S&P 500 can rally in March, and then in later this year that might be what will play out. And that is my battle plan for the foreseeable future. I like the S&P as a play right now, so I'm going to continue messing around with it. Also, gold moves similar to US 500, and obviously it's a inverse correlation with the dollar. So I would expect it to come down to the 1800 level, which is the daily 200 moving average, and then, you know, just at the same time the S&P 5 rallying and the dollar coming down a little, you know, just do a little bit of a rush up to this 4050, 1850 level, and then we might see another leg. Gold is not too strong usually in February, March, so we will see how it goes and how it plays out. If we come over to Forex Factory, we can see that this week actually is going to be pretty mild. I won't be in for Monday and Tuesday. I have to be out from the house, so I'm not going to trade those days. Maybe come back on the 28th. We'll see what can we do. It's pretty mild, nothing really except for the consumer confidence, but that's 4 p.m. In European time, so I might not be in the market by then. And then we can see that it is still, well, PMI comes on Thursday, but apart from that, it's fairly easy. It's a mild week ahead of us. And with that, I will close out the video because I'm trying to keep this as short as possible while being informative. I will include more and more educational bits and pieces because I'm trying to help you guys as well to achieve your goals and dreams just like I am. Even though this week didn't went as well as I planned and as I hoped, I will be here putting in the work because that's what traders do. So thanks for being with me on this journey. Thanks for being here. If you found any value in this video, please consider subscribing, hit the like and comment, and see you in the next one.